welcome viewers. I'm Hiral Daria. Let's quickly understand what does this equity route actually mean for the commodities market as well. Let me welcome in Kunal Shah, Head Commodities Research. Kunal, overall, if you go to see, it has been a pretty rough week, not only for the equities, but for the commodities market as well. How do you explain this route right now? Because the kind of recovery that we did see, you also have China, which has gone ahead and cut the RRs for a lot of banks. What does that actually mean for the commodities market?
Okay, the fact is the problem started with China 2 months back, and the stability is witnessed in China right now first. So I believe that whenever the crisis always comes in disguise, and that is what we've seen in the global markets in last 1 week. So no countries, not everyone was expecting that this coronavirus will spread to so many countries and so fast. But the fact is, the way now everyone is taking the preventive actions, the travel advisory have come, so people are not traveling, quarantines are taking place. So I think maybe in 1.5 months, 2 months, it should settle down, and hence I think the fear of coronavirus leading to a crash in global economy or recession, I think that is completely priced in. The way we've seen global markets going down by 25 to 30%, all asset class, even commodities, we've seen a rout in commodities on account of this coronavirus. So may it be metals, may it be energy, everything is battered right now. So I think we get a sense right here that we are in for a pullback globally in most of the riskier asset class, because central bankers are again stepping in. Tonight US is also going to start putting more liquidity. So I think in totality 500 billion plus 1 trillion, so $1.5 trillion is going to be infused by US, which is sizable amount by all means. European Central Bank is also promised to do the quantitative easing. So I think the pullback is in for commodities. China cutting rates, all this indicates towards that metal prices may bounce back. Steel rebar in China, on MCX copper, one can go long around 422, 423, and expect prices to move up and test levels of 430, and stop loss should be placed at 416. So I think copper looks pretty attractive. Nickel also fundamentally very strong metal. So nickel also 920, 25 good levels to go long. 955 to 960 one can expect. Stop loss should be placed at 905. Nickel and copper looks well poised to go up from present levels.
Right, so at least right now the tide has turned towards the base metals, what's looking strong. What is the view that you have on crude right now? Because as we mentioned, it's been a rough week. WTI and Brent itself are headed for a weekly loss, I think, that we wouldn't have seen since 2008 onwards. Now, you have travel bans, you have events that are getting cancelled, economic disruptions that are coming in, and all of this is something which is actually eating away the crude demand. If this continues, and with this, you have major oil producers as well, which are coming ahead and actually planning to add more crude to an already oversupplied market then. If you have to club all of this in, what happens?
If I want to club and want to conclude everything, then I would say that a bounce back because of the optimism in the financial market or the recovery or the bounce, the terminology, you are going to see a bounce in crude oil futures also. The fundamentals continue to remain weak. It is going to take some time for Saudi Arabia, perhaps 1.5 to 2 months, to reach to the 12 million barrels mark. But I believe that in near term, for the day or two, one should go long in crude oil and expect prices to test levels of 25.30 to 25.50 on MCX. It's just the technical pullback we are expecting after massive downfall what we have seen. Most of the risky assets are going to move up, so crude oil should not be different. And I believe that we are going to see some bit of recovery in a day or two in evening session, or perhaps it is likely to continue on Monday also.
So a short-term bounce that could be expected in crude as well. But after that, again, you will see that kind of cooling off that will start coming in.
Yeah, so maybe WTI $37, $38, or Brent $41, $42, not looking above it.
Right. And very lastly, in terms of gold as well, you have started to see some bit of weakness. Now, one thing what I ascertain over here is that the kind of route that we saw in the equity market, one chance was that a lot of pressure came in on the traders as well to actually, on the back of the margin calls that were getting triggered, because of which people who had positions in gold probably started selling contracts there. Is that the scenario that was panning out in the market, or was it something else?
I think you got it right here because everyone, all the assets you are holding, so real estate you cannot get rid of
Correct.
immediately. Equity were down like 35%. Stocks were hammered and butchered in last 7 days. As far as India is concerned, we've seen the FI selling of more than 50,000 crores. So what the people are going to do? So in order to make up for the losses, the gold prices in last 2 years have risen by more than 40-50%. So
Correct.
this is the only way they can realize their profit on
Profits.
something. They were in the money in some asset, so people were seen taking profit in gold, and I believe it can continue. It can go down and test levels of 41,000 on MCX, but the long term outlook continues to remain very bright. So I'm not bearish on gold, but in near term this pressure is likely to continue.
Right. All right, Kunal. Thank you for getting us this view. So, long in terms of crude, copper, as well as nickel are concerned. That's the view coming in from Kunal. Thanks for watching.